Let's talk about Crompton Greaves now. Crompton Greaves Consumer Electricals posted a steady set of numbers in the fourth quarter with a 10% growth in sales, 17% growth in profit. What's driving the numbers? Shantanu Khosla, Managing Director of Crompton Greaves, now joins us. Agam Vakil from our research team is also standing by to take us through that conversation. Agam.
Shantanu, good afternoon. Thanks for joining us. I just want to start off by asking you about your largest segment, and that is the electricals consumer durable segment. We've seen subdued growth for the quarter. I just like your assessment of the quarter that's gone by and what we can expect when it comes to this particular segment when it comes to financial year 19.
Sure. Our ECD segment, adjusted for Excise and GST, grew 10%. We had robust growth in our key fan segment, which grew just under double digits, and our pumps business, which grew 13 to 14%. Along with this growth, we also had strong margin growth and profit improvement as we continue to drive our strategies of innovation, premiumization, and a really aggressive cost reduction program. One of the critical things, obviously, which has driven the business is our premium segment, and the focus in the future will stay there. The premium segment, for example, in this year was up 24% for the fiscal, largely driven by a single really strong, meaningful consumer initiative, anti-dust fans, which sold in excess of 200 crores for the year, which probably makes it the single largest fan initiative in year one, really ever. Following on this, we have just introduced another really exciting new initiative on fans at the back end of this quarter, which we call Air 360. This works on a proprietary, unique design, which delivers 50% more air coverage and airflow over 50% more area. So, think of it. You're sitting in the corner of the room today with a regular fan. You don't get a breeze. With Air 360, you get a breeze. Something which in our consumer testing, 2 versus 1 versus a normal fan. We've just introduced it, and this innovation will continue, we believe, to drive our premium business and also continue to be healthy on margins.
Right.
Similarly, on pumps, we grew actually with a single initiative which we call Crest Mini, which was a redesigned pump which provided great value for consumers, and that actually delivered a 25% growth in pump units over the quarter and really drove our growth. So these consumer innovations, which are really meaningful, supported by advertising, so we create awareness and trial, supported by an ongoing program of improving our availability and strengthening our go-to-market, distributor partnerships, retail coverage, salesman capability, has really what has continued to grow our market share, which is up for the quarter across fans, and we believe will continue to drive the business moving forward.
Right. Mr. Khosla, I just wanted a word on your margins. I want to talk about input costs specifically in this case. How are you viewing the change in trends when it comes to commodity costs, and what bearing does it have on your gross margins right now? And also, what is your outlook? And should you expect an increase in some of these commodities? How are you tackling this problem?
Well, commodities always follow a cycle. Commodity costs come down, commodity costs go up. Clearly, currently, we're in a cycle where commodity costs are beginning to trend up. The way we tackle it is very simple. We have an ongoing cost reduction program, and this program is critical when commodity costs are favorable or when they're the other way around. Our strategic approach is simple. We plan to cover inflation, because inflation will always happen, 1/3 by improving our mix, so driving premium fans really helps, 1/3 by continuing cost reduction, which is something we always actively do, and 1/3 by pricing it onto the consumer, which we've also done in the past, and clearly with a strong brand like Crompton, we can command that price increase.
Right. So also a word on how the company is looking at taxation under the GST regime, and if you could also take a, give us an outlook on the shift when it comes to wholesales and distribution based and on the taxation that we've seen come through.
Well, obviously, like we all know, when it was first implemented, there was a disruption for a quarter or so. Gradually, we've seen that disruption dissipate, and in a sense, markets are back to normal from a consumption point of view. Now, of course, GST offers us significant opportunity. It offers us opportunities to put up more efficient supply chains. For example, in a CST regime, you needed to have a depot in every state. Now, you need to have a depot where it makes sense from a service and a cost efficiency point of view. We've already begun a program specifically in North India now for the last 2 quarters, where we are partnering with Future Logistics to set up large hubs which will service much broader areas, and not only at a lower cost, but importantly with better customer service. So we see this definitely positive, more efficient, less wastage, and also at the end of the day, better customer service, so our products are more easily available and seamlessly available to the end consumer.
Okay, Mr. Khosla, we leave it at that. Thanks for joining us and giving us an update on the company's earnings as well as the outlook going forward.